gadget that they actually deny that they're creating. It's just an image, CGI image of a laptop.
Just wait till the droid gets you. Anybody heard of the droid?
Motorola droid.
Yeah? He's an Apple guy, I'm a Microsoft guy, and a real guy, so we always have this little problem. See who comes out on top. I like PCs, I can't just get used to Macs, so I'll stick to PCs.
Who's seen the Mac versus PC adverts? We could create one, you know.
Love them.
Okay, QQQ, 2 years. This is the time we entered the trade here, and the market went straight down. Yeah, 25.60. This was a period of 2 months, October, November. If you were trading normally without protection, you would have been killed. 1,000 shares you had in there at 42,000, suddenly worth 25,000. Because it was protected, we got our money back. We made a profit. We went on to invest into more stock. One of the strategies we teach you is to how to take advantage of the protection that you have there to buy more stock without actually investing any of your own money. So you dollar cost everything in your stock by using your insurance. And that is how you actually end up making quite a bit of money on the upside. This is the trading range of QQQ. This is the basic information that you need to be able to sleep at night. Yeah? If you don't know where your stock's been trading or how far it can trade up or down in a month, and you've got 1,000 shares, you're constantly worried. But if you know that this information, this is worst time in the market, September, October, when trading range was down 721, 602. $10.88 was the trading range on the QQQ. That means the lowest and the highest in the month. If you know that information and you know you're protected, you wouldn't have to worry, because if you look at the average trading range, it's $3, $4, $5, $6 in a month. So you can buy 1,000 shares and know your account value is going to be up and down $5,000 to $6,000. But if you're getting $3,000 a month on this as a rental income, why would you worry where the stock's trading?
And you can get that information for free on Yahoo Finance. Don't listen to these people that try and sell you these charting systems.
The whole idea, if you invest $42 in a stock and you manage to get a couple of dollars a month in rental income, the stock's going to be free in 20 months. So why should you worry about where it's trading? If the stock's paid for itself. If you had a property, the rental income that's coming in pays for the property for 2 years, would that be a good deal or not? Yeah, that's exactly how we use stocks, except we're using stocks as income generating assets rather than just waiting for them to go up. So it doesn't matter whether they go up or not. Anybody who had QQQ last year is probably now just sitting on break even if they weren't using income generating strategies. Paid $42, it's trading at $42, $43 now. Wouldn't have made a penny, all that money tied up, not earned a cent. EFA, one ETF which invests in the largest corporations ex-USA. That means if you think the Americas are going down, you buy EFA, which you're investing in the biggest companies outside the USA, BP, HSBC, Toyota, GlaxoSmithKline, Nestle, Vodafone, Novartis, in fact, nearly 100 companies. Next one, EEM, emerging markets. A lot of people like the emerging markets. You've got Gazprom, Samsung, Poshco. EEM is the ETF for the emerging markets. One trade gets you into Russia, China, Japan, etc. IYR. This is the ETF for the residential or commercial real estate in the States. It's got mortgage rates in there, NLY, Boston Properties, Equity Residential. So if you think property markets hit a bottom, instead of going out trying to find a particular company and having the company risk, if you just go out and buy IYR, and this in fact gives you a dividend of nearly 8% at the moment. On top of that, you create your own super dividends, which we show you how to do, and that's another 2 to 3% a month on top. So you can buy the stock and just forget about it. Get paid to own the stock, just like property. XLF, this is the ETF for the financial sector. American Express, Bank of America, Bank of New York Mellon, Goldman Sachs. Instead of buying all these individual companies, You can just go out and buy XLF and you're investing in the largest banks in the States, largest financial companies. One trade gives you instant diversification. XLE, this is the ETF for the energy sector. It's got the oil companies, the oil service companies. One of the best performing ETFs at the moment, the price of oil's gone up so much. And they give you a good dividend as well. But the main income that we generate is what we call super dividends. On this XLE, you're getting premiums of anywhere between 5 to 6% a month. That is if you're investing your total cash. You're using regulation T margin, which is 50%. That's 12% return on your capital. 12% a month. Compound that. You don't need a lot of capital to actually start making real money in the market. XHB is the ETF for the house building sector. You can see some of the companies you probably recognize, KB Homes, Mashco, Owens Corning. These are all American companies involved in the housing sector. One ETF, you're in the housing sector. XME is the materials, metals and mining, for the largest mining companies. Finally, the XLK. So, apart from the QQQ, you can actually invest in the XLK, you can invest in the technology sector. And we come to the best performing ETF at the moment, GDX, which is the mining sector, where the gold price has gone up so much. How would you like to get paid to own gold? Buy gold and you can actually get paid super dividends for owning gold. Who thinks gold is a good investment? $1,100 today. Yeah, you've all-time high, expected to go up to $1,500, but does it matter to you if you're generating 4 or 5% a month? What the price of the stock is? Yeah, your valuation of the asset is based on how much income you can generate out of it, not what it's likely to be. If you were in this metal here at 100 and it goes down to 70, you've just lost $30. As a protected trader, that $30 drop would have been covered for you, and you would have received an income all the way down and all the way back up again. Some people like specific countries. Now, a lot of you are from different countries here. So if you feel, I'd rather be investing in Russia. Anybody from Russia? Not this one, unusual. There's normally a couple of Russians. RSX. It's done very well over the last few months. China, FXI. Brazil. FXI has done phenomenally well since March. Brazil, EWZ. You've got Japan, not doing too good. Hasn't done too good for 20 years, I don't think. Anybody from Japan? So stock markets can be flat for a long period of time, especially some individual company stocks. So you need to have an income generating base to be able to make money out of the market. You can, yes, say I'll buy Japan and 10 years time maybe it will go up. But what if it doesn't? Rely on the income and the super dividends.